Hey Phantoms, I hope you're all having a fantastic day, evening, morning, wherever it is and whenever it is that you're watching this video. Now this video is in replacement of this week's Wednesday market commentary video. We figured it would have been a little bit more informative or more beneficial to do something like this, a simulation session, rather than break down the markets. We're ramping down in our trading personally for the remainder of the year. The volume in the markets is definitely beginning to deteriorate. The markets are a little bit more choppy, and we're beginning to switch our focus onto reviewing our trades, reviewing our performance, doing some case studies, back testing, and really just preparing for the new year when the new volume, the new liquidity sets back into the markets. And also, of course, and more importantly, being able to spend time relaxing, recharging, spending time with our friends and our families, and really just taking that time to enjoy the holiday season. Whether you celebrate or not, it's a great opportunity to really refresh, recharge, and get yourself prepared for the new year, new goals, but same vision moving forward as we continue our journeys. So without further ado, since we do have a fairly long simulation session, we'll jump right onto it. We were joined by Blackwatch for this simulation session as well. So the three of us were breaking down Aussie US dollar and trading it as we would live. I hope you enjoy. I hope there are many lessons, little nuggets of information that you can gain from this simulation session, and just the way the three of us break down the markets and kind of give our individual flares of how we do analysis, how we approach the charts. Although we are very similar in our approaches and we do speak every single day when it comes to trading, it is nice to put our heads together and take these setups together. But one thing to note, because this is a simulation session, these results maybe are a little bit out of the ordinary. We are extremely focused. We're able to just continue to play price forward. We don't have to worry about sleep. We don't have to worry about, general life in the way. So of course we're a little bit more focused, and we're able to be a little bit more patient, I suppose, as we navigate the charts. So our results and really the expectations of this session is nothing shy of incredible, but it's something to just take into consideration that, what we end up achieving at the end of the session isn't as important, but it's really the concepts and the way we approach our analysis that really you should be taking note of. And that's ultimately what we hope that you gain from this simulation session. So without rambling on too much further, let's jump into the session. I hope you enjoy. All right, so I guess we'll get started.
Yep, perfect.
I guess probably the best thing to do is take a look at the daily chart, frame ourselves up in a way that we need to.
Yeah, definitely.
So the things that I see right off the rip, we're in this uptrend, making higher highs, higher lows. We've come down, made more of a deeper pullback, but we are bullish. Apparently I can't speak, but that's okay. We're at this, basically swept the low here, swept the low here. So we've basically taken all the liquidity that was sitting under the swing low after this large down move. And point of interest that I would be keen to look at would basically be this area right here, which is a daily order block, broken structure, created imbalance, most of which has been filled up until about this range. So we have a reason for price to come back up into that area, as well as we've taken liquidity to the downside now to basically push price to the upside. So from like an intraday perspective, I think we could likely look for some buys in this point up until this point, and then look for a potential sell and basically approach it like that.
Yeah, obviously market's making higher highs and higher lows on the left, so we do need to be mindful that we need to see some more bearish intent to the downside, but we did fail to break the highs on that recent swing where you have placed the order block.
Exactly.
In terms of momentum, the three kind of bearish Marabuso candles we've got at around vertically above between the 15th of September, which obviously follow the area of interest you've drawn. Like you said, there is some imbalance there. We are starting to show some form of bearish correction intent to the downside on this current price action that we're looking at right now, where equal lows are. There is going to be some trendline liquidity. Obviously, whether we actually push back up before we break is interesting. It's going to be interesting to see, just because of how corrective it is.
Yeah, exactly. So yeah, we'll see. I mean, I think the thing that's key to note too is that, we've seen this impulsive move to the downside, and our expectation would be that price would continue to the downside. And right now on the daily chart, we're seeing price is failing to do that. Obviously, if we start to break and close below, we'll see that lower low being printed, but you can see that basically struggling. We put in a higher low initially within the substructure, a higher high, and then we've broken down, but still failed to break this low. We've now made a lower high, potentially a lower low, but we're still well within the range there. So
yeah, zoom out, go into the 4 hour and then see what we've got. Okay.
Navigate MT4 a little bit. It's been a while. I'm so spoiled trading off a trading view.
Lower, higher. So there's going to be some liquidity sitting above these double tops here. Spot 71.57, just around here.
Yeah, that makes sense.
Which we want to target. We've taken out these relative equals at the low where we're currently sitting on price as well.
I think another good thing to note as well is that price failed to break this low at this point, and then gave us structure to the upside here off this substructure, indicating potentially that price may want to continue higher.
Yeah, definitely. Obviously, if we look as well at where that line is, obviously you've got the higher low here pushing up to create these equals. Obviously, liquidity is being built in this whole area of kind of corrective price action, which is a pullback. This is the level. We need to see this level break. This level here will tell us what's happening.
Yeah.
I just realized that my cursor doesn't show me that.
Yeah.
Let me undo that.
We'll get used to annotating as we go. All right. So kind of have our direction. Now it's a matter of waiting for some sort of price action confirmations to potentially take a long entry. So if you look on,
I was going to say, is there any longs to hedge into the short based on the bias?
As of right now, I don't really see anything.
No, definitely not.
Just a
Even
little bit. We're
there's
starting
no clear
to
structure on the 15-minute, 5-minute at the
got a really
moment
nice
in terms
wick
of breaking.
on the 15 and the 5 and the 1. We're starting to see momentum. Break structure on this.
That's what we need. We need that breaker structure up here to actually. I'd be keen if we go on to the 15-minute. I'd be keen just before you zoom in. I'd be keen to see if that level can break.
Yeah, I think that's a key level to be waiting for to break before we really look at anything.
High, low, low, low.
Hope I did it again. Keep letting price play out.
High or low on the 1 minute. If we can break that.
Definitely looking at some bullish expectational order flow here potentially.
Type 3 mapping break at spot 70.13 on the 1 minute in terms of a high just on the wick basis. Liquidity being built. They're relative highs as well on the 1 minute.
Yeah.
So. And to be fair, the 1 minute's got those equal highs still sitting present, haven't they? About spot 77 to 7. Yeah, 77.0.
Yeah, because we broke that just slightly. Of course, with the type 3, we could look at an order block here if we wanted to take an entry, but
one thing to note, it is a counter trend reversal, so obviously we've got to be careful with it.
Yeah,
but if we get the right confirmation entry and we actually get a decent push up, we may not need to take the entry right now, so to speak. We could take it as the pair develops up.
Yeah, it's better to wait for a stronger break. Like, sure, on the 1 minute it looks great, and obviously we see the reaction happening, but that's only like 14 pips.
Yeah, it's got intent. There's definitely intent there.
Definitely seen some momentum entering the markets now, which is good.
Can you see how it's reacting to those equal highs though, like relatives? It's just
it's swept it now.
Liquidity now it's swept.
This out of the way.
Yeah.
Yeah, we like basically broke the high, but again, it's with the wick and pushing right back down.
Yeah, we've still got that gap to fill as well to the left of that swing high wick that you just pointed out.
Yeah.
Relative equal lows printed on the 1 hour.
Yeah.
Got that huge imbalance still as well. Obviously, we want the upside to be pushed into so that we can get that short. That 4 hour right now is still looking very good to be filled with that imbalance.
Just waiting for some clear price action. So right now, like, yeah, we've broken structure. We've seen a nice move. So, we could look at this order block, but then if we're looking at the structure altogether, it's not really conclusive. We start looking at the 15 minute, even the hourly. We just have one bullish candle in a sea of bearish candles. So
yeah,
exactly.
And then we
we're
get
building that trend line liquidity, aren't we?
Yeah, exactly. So we got to get more people to want to buy to push price down, probably lower, and also get people to sell. Basically, just get lots of liquidity into the markets here.
And can we speed this up ever so slightly?
Yeah. So we swept the liquidity of that wick.
Mm-hmm. Equal highs, lower low.
It'll be interesting to see if it starts to break like substructure levels.
Yeah, looks like we're starting to potentially get that.
Just printed equal lows on the 1 minute, which we obviously, there we go, swept that.
Can we slow it down a little?
Yeah, slow it down. It's getting a little crazy.
Still fitting it.
Nice drop, likely to induce people to be selling based on that trend line liquidity that we've seen.
Yeah, it's still in line with intra-trend in terms of M5, lower highs, lower lows being printed.
Mm-hmm.
A lot of liquidity sitting in that imbalance.
Imagine it'll come and fill this imbalance on the 5 minute.
Yeah, absolutely.
Potentially react off of this level for just a reaction anyway, but
yeah, basically come back down into like this area.
Yeah.
We'll see if it breaks up to the upside. That would make a nice order block that we could look to go long on. Speed that up just a little bit. Basically filled in all of the 1 minute imbalance, 5 minute imbalance, approaching that order block on the 5 minute. Again, not a really convincing break to the downside. So obviously not really an order block we'd want to be trading, but definitely something to take note of to understand the order flow and kind of just the way price is being traded right now.
If you take it all into factor, look at the 4 hour in comparison. The 1 minute, 5 minute are being very noisy and busy. But if you look at the 4 hour and the 1 hour in particular, what's it doing? Zooming out, and you can just see that there's no real direction. The structure building, but we're literally creating a corrective downside move at the moment. Like there's nothing favoring any trade. Like we got a question earlier today, which was, what do I do when the market's ranging? Well, if there's no clear intent, we just sit still. We can trade the ranges on the lower time frame, but that's when we're going to be induced to FOMO, fear of missing out, over trading. Just take a step back, zoom out, see what the 1 hour, the 4 hour are doing. We know what the directional bias is on the daily. We appreciate that there's imbalance and liquidity being left to the upside. At the moment, the 1 minute and 5 minute are just creating noise. They're creating structure, they're building that liquidity, and they're inducing the market players to get involved. But the 1 hour and the 4 hour are just shaping. The wicks are to the upside. You wouldn't necessarily want to be buying per se until we develop clearer signs. Like I think it was Sketchy, like Sketchy said, you don't have to be the first in the market. Just build the story, take your time, wait for the market to show its hands, and then take or execute the trade accordingly.
Exactly. It's all about building the narrative and not just jumping into a trade because it looks okay. You want it to look great.
Bearing in mind we're literally probably an hour or two into the London session, market's still ranging, and if you look at the kind of 1 minute, 5 minute.
Yeah, we're just basically building liquidity.
Yeah, it's definitely looking to induce buyers and sellers into the market, shaking out people. Especially you can see it with this kind of step ladder action here, and then just to sweep out all the liquidity in one go.
Yeah,
And now
definitely.
we've swept liquidity here, and there's still liquidity to the upside as well as up at this structure.
This is where, within this wick, this is where I'd like to see market starting to push up.
Yeah, this could be an opportunity to get in long, especially I just drew in a 4-hour order block from
I've seen it.
a little
It's
bit
nice.
further back, trying to understand, why price is doing what it's doing, where we currently are, why we're slowing down right here.
Yeah.
Right now we're just consolidating, building orders, more than likely to push higher. But
it is Monday morning as well.
Yeah.
It would take a little bit of a while for liquidity to really flood in, as we know and we see.
Yeah,
9 a.m. GMT.
I also believe that this is generally Asia, I think, based
on
it
looks it. If you look at the kind of timestamps, obviously, what is that? Midnight from 2nd of November through to like 5:30, just before the huge liquidity drop, which is that big bearish engulfing candle.
Yep. Yeah, definitely the Asian range. And now we're starting to see volatility coming back into the market, which we can see we had the nice sell-off, which swept quite a bit of structural points on the 1 minute here. And now we're starting to rally to the upside.
If you look at the 4-hour again as well, we're just getting little sweeps of liquidity with no real commitment to the downside, which is good. This is typically what you want to see on the 4-hour as price taps in liquidity just before, and then a sweep of that liquidity there.
Yeah, because what it's telling people is we are making lower lows, but if we're looking at how stressed these lower lows are, we just barely break the low, and then we start to get buying pressure back in, and then we factor in, where are we? We're in a 4-hour order block, and what we can see is the sensitivity now makes sense.
Can we zoom into the chart a little bit in terms of actually drag the price down so that we can see the bottom of the order block on the 4-hour, please?
Yeah, just like that.
Perfect. So we're pretty much at EQ. We've tapped EQ. It's not necessarily giving that convincing move up, but like you said, we're creating that tweezer bottom essentially.
Yeah, it looks like now we're starting to get some momentum in the market, which is good. Shows us that we do have a decent reaction. We can see it on the 4-hour, the 1 hour specifically, and of course on the lower time frames. So that tells us we have a little bit more sponsorship. We've broken structure, a couple structure points, and we're basically tapping into 5-minute highs, a bunch of equal highs more or less. So we can begin to look for potentially trades. So if we want to maybe pause it for a second and just see if they're...
Yeah. I was just going to say this down here, obviously we were pointing this out. There's no real clear entry at all on the 5 minute.
No.
But you
even
can
on
see
the 1 minute, there wasn't really any structure break to...
there was that there, wasn't there?
Yeah.
There was no structure break to the upside. Definitely not. Obviously we've got the lower high here, high here. Well, equal highs for the liquidity inducement.
But like if we're looking at a range, it would have been basically this point. So yes, this is a valid mitigation, especially in hindsight. Now that we're looking at it, we tapped into a 4-hour order block and we've seen price move away. But if we're trying to follow rules and really make our trading, kind of systematic, this is not really a great area to be looking for buys, because we really have no indication that price is going to, move to the upside in the way that it has.
Not if we actually look back on the 4-hour from where the actual order block was originated from, unless there was some form of kind of IFC sponsored candle, FU candle, which there kind of is, which essentially with the way price then kind of moved off from it, which is the, higher high up here, higher low, comes back to fill it, which in essence, it can be considered as a confirmation entry, although as it's only tapped into it once, it's a risk entry. However, you are right. Based on this area of price action, there's no real commitment to the upside. Yeah,
exactly. So, but at least we know now that the trend is definitely switching back to bullish, and we can see that, on kind of more intraday timeframes. So we can start looking for potentially some continuation trades to play in the momentum of this move.
Yeah, the daily is also starting to show some quite nice momentum, especially if we look at the candle itself. It's engulfed that previous daily candle at the lows. Still a fair amount of liquidity sitting up at the top, but it's going to take some time to get up there.
Yeah, totally. We're starting to range a little bit, but it's 10 a.m., so that makes sense. About 5 a.m. Eastern, so.
Broke these highs. Momentum kicked in here. Imbalance left. Obviously had that one there. Lower low.
One thing to keep in mind too is once we start sweeping these highs, this is generally where price might start to exhaust and maybe not give a full pullback, but it should start to trickle away as liquidity is filled and these positions are taken out.
We've got some liquidity sitting here with imbalance on the 1 minute. Some liquidity sitting here with the imbalance partly been mitigated, but not fully.
Yeah, and even kind of right here.
Yeah, we've got the imbalance on the bearish, the bullish engulfing. That's a really nice 4-hour candle off of that block.
Yeah,
really
Yeah,
nice.
this is clean.
Definitely shows you, it's allowing the market to show us what it wants to do instead of trying to force, our analysis onto it. Yes, we, haven't actually gotten in at the bottom, but we're starting to really build that narrative of, okay, we're starting to see the 4-hour and the 1 hour really starting to push. We haven't actually broken any structure on the 4-hour as of yet, but
No. We're counter trend. Remember, like obviously trying to get in at the lows there was literally like Blackwatch mentioned in his video recently around expectational order flow. The market obviously is still pushing up against us. Where's the true reversal points? There's only 2 at the extremities.
yeah, exactly.
We was 1 at the extremity there. There was an entry. We saw that, the 4-hour play, which we're seeing continuously mapping out high highs and high lows across all time frames. A little bit choppy heading into London, which we expect. And now we're really starting to show some commitment. And again, just as another reminder to everyone that's listening, we are only obviously on a Monday morning going into pretty much the lull of London session now. So it's early days.
Yeah, we're not
No need to
necessarily
rush.
rushing anything, and maybe starting the simulation at this point is actually good because there's no need to rush into any trades just for the sake of taking trades or whatnot.
No.
Only take what makes sense, and when the market shows that it wants to do something.
Now, one piece of price action that I am interested in, I don't know if it'll play anytime soon, but based on the fact that we're relatively efficient through this 5-minute price action here.
Yeah.
And then we have this fairly clear order block
Yeah,
in this
right
area
there.
with this imbalance. So I imagine price will come to fill this imbalance, potentially tap the order block. The only thing that I would be cautious of is essentially where the liquidity lies within this range.
Just as a jump in as well, obviously I don't want to delve into it too much, but we've tapped upon this before. This swing high here, which potentially obviously forms off of this kind of block here, we potentially have, in essence, like we were talking about, that relative equal high, relative liquidity sitting here. And we've also got that kind of breaker block formation. So it is underneath that, but it's subjective of whether we're actually going to pull back that much.
Yeah, exactly.
There's a clear level of traffic, right? So you know that there's orders within this area. So it's a good POI.
Yeah, absolutely. So it's just a matter of where is the best place to get in terms of like framing up a true point of interest. Yeah, the 5 minutes super efficient. Even the 1 minute, except for like this small bit here.
Yeah.
It's all very efficient.
Which is, I do believe, why price will eventually come back to fill this. But this is why market timing is so important, right? You get, once you've hit a certain level in London, you get a lot of this.
Yeah, you get a lot of sine wave range.
You might
basically
find
the
some
accumulation.
setups. Exactly. Right. You have your spring and a test of it potentially.
It's copy this because I do like this zone. I think it's a good spot to look at, especially for a couple of reasons. You know, we have the nice move we've broken structure. We have the imbalance here, and we also have some equal lows. We can see that the liquidity being generated here on the 1 minute chart as well. And we're starting to push away from it.
Yeah.
Close, perfect.
On the higher time frame, it definitely would be key. I'd be keen to see how price breaks the structure on the 4 hour, especially just on the basis of if we look at the latter of the block on the 4 hour, we still obviously have imbalance and the kind of last buy before the sell, creating that potential order block for the higher highs.
Yeah, exactly.
We need to break these structures. We need to break this higher low and the lower high. The lower high is more important, but
You can see how important this liquidity is on these, even on the lower time frames, or not liquidity, excuse me, these imbalances. You see just this little one here is just filled, and then it goes making price efficient again.
Yeah, and then pushes away because it's been able to rebalance price. That's not necessarily a trade that we can take, but it's a good way of understanding kind of what's actually happening behind the scenes. Because not every move in the market's tradable. I mean, you can trade it if you want, but you're really kind of forcing, you know, your different opinions and everything on it. So like the one thing we can do too is this 15-minute order block. We can actually find right to this spot. Basically wait for price to get in there. We could build a little bit more equal lows. That'd be nice. What I'll do is I'll speed it up just a little bit.
yeah, it would be nice to build some equals on the highs as well, just so that we've actually got targets to tap into the liquidity. We know we've got the higher time frame order block sitting up there, but it'd be really nice. Push up a little bit more. There we go. Equal highs created on the 1 minute on the swing.
Yep, got some here. Relatively equals on the 5 minutes. Not as clean, but the reason why this 15-minute and 5-minute order block is looking really good is basically what Brian said. You know, we had the traffic here, had this big impulsive move, 5-minute efficient price action. We're able to kind of
Smash
basically filter out any of that bit of price action leading up to it. And the fact that we're building.
Really nice intent to the downside. Can you get that liquidity?
Yes, even on the 15 here, it just filled the imbalance before finally kind of weakening towards the end of the day, it seems.
Yeah, trading into what, the New York sessions now. Just created equal lows on the 1 minute.
Yeah, 5 minute as well. So another thing that makes, for me at least, order blocks a little bit more prevalent is the idea of manipulation around it. So when price forms these equal lows, it tells me that there's a reason for it. It tells me that there's some involvement with institutions that are, there's a reason for it. They're trying to generate liquidity around this area. So that way, when price does decide to move back to the upside, there's less resistance.
Yeah, they got to clear out anything to the upside in order to make price explode in the direction that they want. Just building that liquidity more and more and more, which is great. Very good at influencing price too much.
Another thing you have to keep in mind is because it filled the balance here on the 15, right? It's possible that people are still looking for this kind of bearish structure. So there's still liquidity to the structure on the upside here.
Yeah, there's trend line liquidity where you've just drawn the dollar sign, the liquidity
especially
sign.
If I draw a fib, you know, we're all of this consolidation that we're seeing, this basically distribution is all at the 61.8 fib. So we know a lot of people are selling there, also at the 886 and 70.
Yeah, we know stops above 70 something, 76.8.
So it's all about understanding where the money is likely sitting. which means we'll probably keep purging up a little bit more, inducing more people to sell, then see that pull back into this order block. And then that's probably what we'll start to see a push to the upside once the liquidity's been manufactured enough. That's like beautiful set of equal lows though.
It's clean.
Just a little bit.
So we're heading into pretty much spread hours.
Yep.
Okay. That's pretty
You
obvious.
can see it on the 1 minute, just how messy price action is. Like, you cannot trade this. This is just disgusting.
It's like the 1 second chart.
Yeah. I would hate to see what the 1 second chart looks like during this time. Got a little bit more of a push up.
That
Nice retrace.
It could be a proper sweep of liquidity here.
Yeah, because we get the nice equals. We get that solid break and close, and then an immediate purge. Like, you can see that nice engulf.
There's also equal lows and imbalance here to be filled on the 5. Now, just because it fills it, it doesn't mean it has to continue upwards. It could rip through it. It's just filling the imbalance.
You've got to remember the time of the session. There's
Exactly.
Yeah,
market
this is
players
during
aren't present
Asia.
necessarily.
Yeah. Yeah, because this is about 6 p.m. Eastern. So really, it's just the Australian market's open and Tokyo will open in a couple hours. So
Sensitive area though,
yeah.
massively.
Oh, absolutely. Just
We can see on the H1, right? Ran this POI. The great thing about the H1 is we have relative equal highs here with liquidity and a ton of imbalance to fill to the upside.
slow this down a little bit. Look at that wick. Jeez.
Just push all this trend line liquidity on the 1 minute there. All this really on the 5.
Pure Asia.
Yeah, this is. Nikkei is about to open. Or sorry, it is open. I'm looking down here at this
Buy side
240, but
liquidity, sell side liquidity, all been absolutely
smashed.
smashed.
So got these.
Yeah, if we look on the 4 hour, like
Equal lows down here untouched for now.
really broken structure either.
Not for long.
Yeah. We're approaching our 15-minute entry area where we got more or less not really.
Look how sensitive it is just on those EQLs.
Yeah, it's just getting more people to buy there, so you know it's going to get swept soon. That's a perfect reaction.
Small amount of imbalance, isn't there, to the upside on the 5 minute, like tiny. Mostly been mitigated if you look at it from a 50% spec.
Yeah. Even on the 1 hour, you can see the equals now too.
Yeah. It's clean.
Very clean.
Still a bit of imbalance below it, but we'll see.
So now we're in it. Let's see what happens.
Look at that sensitive. It's playing. There's definitely liquidity there buying, bidding up that. Have we got anything? No structure.
Let's see. Do we break this low? Give us some sort of 1 minute entry that we could get. All right, we have.
So we just broke those equal lows on the 1 minute as well.
Yeah, so
Now we need to start watching the structure.
let's just zoom this in just a little bit.
Obviously, it's still counter trend. Lower highs obviously being printed on the 4 hour and the 1 hour, which is fine. But we're building enough liquidity in this kind of range and distribution that distribution being sideways, actually not a distribution Wyckoff, just to confirm.
Yeah.
There's the push.
Yeah, so we've broken structure, so we can navigate down to an order block that we can look to very potentially enter on. So we'll risk 1%, use a buy limit, take off the target profit. Entry will be
At the distal or at the EQ? Because what we're looking, is that 5 pips if we were to place the execution on the distal?
if it's at the distal where the stop loss in the entry is, it's about 1.4 pips right now. So
Oh yeah.
when it comes to like
Was it
1 minute
dollar?
entries, especially if it's like that much of a difference in terms of my stop loss, like 1 pip, I'm more than happy to do the distal to get into the trade and
Yeah,
not
definitely.
use a super like tight
Just be
stop loss.
conservative, like, you know, I'm not saying you, but stop trying to smash it out of the park. Like, if this goes for 4 or 5%, you've still got to be kind of remembering that that is a decent R.
Yeah, exactly. And we have no idea. This might not even tag. We could just get momentum that just continues to rip to the upside, which is pretty probable looking at the 5 minute momentum, 15 minute here, even the hourly. But we've been able to react off of that. We swept all of the liquidity that's rested above that point of interest. So, and it all started from this 4-hour point of interest, which is we're building that case for entry, the daily being upwards, 4-hour point of interest being mitigated, and then framing
Spreads are
up
good
that.
as well. Spreads
Yeah.
are good with this broker. Just a shame that FTMO don't use them anymore.
Yeah, I think this is actually Dukascopy data that we're using.
Oh, it's Dukascopy. Oh.
Yeah, so pretty decent.
Yeah, I reckon there'll be about spot 7 spreads, 0.7. What is it?
Yeah. So reacted off of that.
Fair amount of momentum on that breaker structure on the 1 minute. Just
Yeah.
not too. And then we started correcting, which is creating that rounded top.
So definitely in an area where it wants to continue to the upside based on that imbalance that was filled earlier. So like you said, hopefully we'll find, or hopefully it'll come back down to tag us in. I think that's why I like using the extremities more than anything, because
Yeah,
you're chasing less trades. For instance, if it comes down here, you get in and then it ultimately takes you out for break even or whatever. If it decides to come back down, then, you know, will you have the confidence to take this as well? You know, you might get into this lower order block, the initial entry here at the origin,
yeah,
or you might not. That's kind of the thing, but it's like
Yep.
you're at the end of the day, you want to protect your capital. You know, if you take a loss, you get in, you take another loss, then, you know, you're just chasing the trade. But here, if it goes against you, you know that you're just wrong on your directional bias.
yeah, exactly. What would you guys say about? So we've broken this structure point quite impulsively. Broken structure here, as well as in the 5 minute. We've wicked this. We have a point of interest here that's intersected with traffic. We have an order block here. It's continued, pushed up to the upside. Would you guys look to enter on this 1 minute order block there? Or
I
would
guess
you?
it depends how it breaks this next, where this kind of price is at the moment. It depends how it breaks that. Because if real momentum kicks in, it potentially means that it's going to move all the way back to the origin. However, it's broken a few things in sync. It's got what, 1, 2, 3, 4 2 or 3 substructure breaks. We've wicked the 5 minute structure high.
Yeah.
We're still inside the 1 hour high and the 4 hour high. Obviously, the 15 minute is still pretty much in the middle. So I guess if price action starts to roll over from here,
We've gotten a break, a wick break, sorry, of the
Yeah.
5 minute high. We've closed below it. Would you look for a decisional? Is that,
yeah, I'd be more keen to go for a decision on the wick break. That's exactly why I'm trying to see how it rounds off on the 1 minute. If it starts to round off after that wick, then I'd be much more confident in putting a position on around the decisional OB if we can find a decent structure, or at least some traffic and liquidity, which we've got.
Yeah.
What's the price there?
Would you consider this here a breaker block? Probably, right? got
Yeah.
imbalance here.
Yeah, that's the traffic zone that we're kind of looking at. That's definitely what I'd class as a breaker block.
Yeah, and the thing that I like about that as well, we have the traffic, the breaker block, and what really speaks to me is this wick
Yeah.
Yep.
that factors in all of that. You know that something has happened there. It's mitigate something on a lower time frame, and will basically continue. Obviously, we don't trade much lower than a 1 minute
Yeah, I was
time
going to
frame.
say let's. I don't fancy going into the 15 seconds anymore, chaps.
Yeah, it's not the greatest time frame to be diddling in the middle on.
And he's dropped
So-
it. How long was that until we dropped a diddle in the middle?
I mean, a fair amount. I feel like we've done well in that. Let's speed up a bit. I've placed an order here, so basically, if we take the loss here, that's fine. Take the loss here. We have 2% risk on the table, so obviously, it's not something we'd recommend, but
And we'll cover our risk accordingly.
exactly. So we've built the story from the higher time frame down to the lower time frame. This is definitely taking more of a riskier continuation play, but we have all the factors in play to really be looking for that. And
Decision and order block break based
Exactly.
on type 3 structure mapping, just for those that want to know how we've decided that.
yeah, and the fact that we wicked this structure and came down gives us an indication, since we are bullish so far, if we are going to mitigate anything, a decisional order block. So this one here is more than likely something that we will see some bit of price action reacting off of.
Sweat liquidity, broke highs.
It's,
Bearing in mind we've built a nice story, a nice picture. We had those equal lows that were swept on the 1 minute, creating new lows. Then we've created multiple breaks of structure to the upside with momentum and imbalance left all the way up.
yeah.
You see what I mean? The rounded top's coming. That 1 minute rounded top's just nice.
I feel
That
that
whole move
did
here.
not tag us in.
I was going to say,
No. Look at that.
That there is the kind of rounded top I'm looking for.
Yeah, exactly. This is what we'll call the big
That didn't
oof.
take us in on spreads.
No,
Spread
it
was
did
like
not.
1.03 pips.
Yeah, so just barely didn't get the fill. See if it comes back down. So
Was that at the distal entirely, or did you front run it ever so slightly as well? I'm
yeah,
just asking.
it's front run by like not much. So basically at the distal, yeah. So
Okay, fair enough.
with that sort of momentum, probably the best case to front run a little bit. But I mean, shows you're going to miss, some of these orders. They're not going to tag you in by a pip.
Well,
and-
it goes to show as well, obviously, just to clarify that the stop was well under 5 pips. You try to execute at the distal following a type 3 mapping breaker structure, missed it slightly. So if we had actually tried to enter on the EQ of that, we definitely wouldn't have been tagged in.
yeah, exactly.
of course, we've got market timing on our side again. Well, not on our side, but
Heading into
with London
Open,
Open, right? London Open, we're going to have a lot of volume behind this, more than likely, if it does want to continue the upside, because we've still got all this liquidity and imbalance to fill to the upside. So,
Yeah.
Got
Do
a lot of
we
good
know
targets.
if we're trading European time or we're trading GMT? Is that 6 o'clock GMT or is that 4 o'clock GMT? Based on the fact it's 6-7 o'clock on the screen.
Yeah, I think it's 7 o'clock GMT if I remember what Soft 4FX uses for time zone.
Okay. Yeah, so that's nice then. That's fine. So we are in London.
Yeah. So what we can see is we've pushed away really nicely. So what I'll do for now is just turn off these orders. Price has moved away quite a bit.
Yeah.
Price starts dropping down. Chances are it's probably just going to tag us in and out of a trade. So we can see that was perfect reaction on that decisional order block. Just
Yeah, definitely.
didn't want to tag us in.
Yeah. And that all comes from the form before. It literally does come from equal lows, sweep of the equal lows, break of structure multiple times 2 or 3. The third one, which was the rounded top break of structure on the higher time frames, it then created that curvature in nature, which was the rounded top.
Yeah.
Moved back into the imbalance and the liquidity that was created on the decisional order block, tapped into the decisional order block, and unfortunately we didn't get tagged in on the distal because of the spread.
Yeah, exactly. So
Look at that, creating higher highs, higher lows, 15 minutes tapped, 5 minutes broke, heading up to the 1 hour and the 4 hour equal highs now. So as you can see, there's some sensitivity. We're reacting to those levels. Just be interesting to see what kind of liquidity it's been creating.
yeah, exactly. Definitely a really nice push to the upside. We're showing just even more intent. So we've been able to build this story from really early days of tapping into the 4-hour zone. We can just see how it translates. You know, we've seen it first on obviously the 1 minute, tapping into that zone, starting to break structure. And then we've just seen it now come into play even more so. Now that we're seeing a lot of momentum.
Is it worth continuing to try to look for a counter trend long into the short play that we're looking at, or should we kind of do a transition?
I mean, we still have a fair amount of room to the upside to look for shorts.
Yeah, we do.
I mean, we have quite the range, so you know, it'd be pretty foolish if we weren't looking for some sort of continuation play, you know, to take advantage of. Especially, you know, you run into the situation where, you know, you've seen all of these moves. You know, there was no entry down here. We missed there was no entry down at the beginning of this 4-hour order block. We missed our entry here. You know, FOMO's coming in. We're seeing the markets just pushing to the upside, exploding to the upside, you know, without us.
That's what it is, yeah.
Yeah, and it's one of those things where it looks, you know, like, oh man, we've missed the move, but we're understanding that from a higher time frame, we still have a lot of move to the upside if we're going to continue bullish, and we've swept the liquidity on the daily as well. So there is a lot of reason to continue to look for that bias. We don't need to switch our bias or, you know, feel like we need to rush a trade. It's really about being calculated and, you know, making the right trading decisions.
Oh yeah, no, I was just referring to, do we continue to look for longs to the upside, or do we do a transition and just wait, basically speed it up, bring it back in as we head up towards the area of interest that we're looking to short? Just for the video, basically.
Yeah, I'll speed it up for sure, because obviously not much has happened, so to speak.
We're just filling all of that imbalance on the left-hand side, that 4-hour imbalance. We're sitting around the EQ of it now. We're just pushing the big bullish momentum.
Yeah.
High highs, high lows. Bullish breaker structures, 1 minute, 5 minute, 15 minute continuations. Smashed through that liquidity. Yeah.
A little structure there. Could see it exhausting a little bit.
Could be a continuation long in that to take it.
Whereabouts? Like right here, or what are you thinking?
We pretty much see where, let me just get my, so this bit here.
Yep.
Was the area. Then obviously we started tapping in, created that rounded bottom, broke that structure, lower high, obviously lower low on this area. I wouldn't necessarily class it. Obviously this is where I'd be trying to target. We've got those little equal highs sitting there as well.
Definitely shows a solid mitigation there.
Mm-hmm.
Just keep playing price forward a bit. Maybe we can get in on the next mitigation that occurs. Definitely, we've seen just this massive rally in price. Didn't really give us any opportunity to really look for anything.
Yeah.
Slow it down a little bit just to...
It's fairly efficient. Obviously, if you look at the 15-minute, we are starting to create imbalance in all of those bodies all the way up.
Yeah.
Some liquidity has been generated. I wouldn't necessarily class this as an order block because it is one, but it's not an order block you want to trade necessarily. It's just liquidity.
Yeah,
exactly.
So I don't want to point that out as a trade. I just want to point that out as, yes, there is a last sell before the buys and the continuation from a momentum standpoint, but that is just pure liquidity being built into the market. It's not something that I'd like to stand in the way of. If price were to come back, it may react. More times than not, it doesn't.
Yeah, exactly. It's just like almost a fake zone. And, you know, one of the conventional things in supply and demand trading is this like concept of rally base rally, not a lower time frame. That's consolidation. You can see it on the 5-minute here. And that just basically is another play on liquidity, almost gets people to look at different things in that. And that's why they don't tend to get respected. And that's the difference between some of the supply and demand zone versus an actual order block on how we trade. Although sometimes they are one and the same, it's not always the case. So it's kind of one of those things where every order block is a supply and demand zone, but every supply and demand zone isn't an order
Equals
block.
Still obviously still there on the 4-hour.
Yeah, starting to build some 5-minute equals.
Yeah, that's exactly what I was trying to figure out, whether it is or not because of the carving of it.
Yeah.
I know price hasn't broken structure here, but if it is going to continue,
it's built the liquidity almost.
Yeah,
to do that.
There's imbalance as well. Really? This is all efficient.
Mm-hmm.
It's already swept the liquidity, so if it wants to play into this sweep, I do think it would be here.
Yeah, because we've swept the liquidity here. We've created an order block. Haven't necessarily broken structure. We've created equal highs to basically do that. So what we can
If
do
we are
is
taking out those 4-hour highs, then yeah, it's. I think we might want to be a little bit wider on the stop, but that's just based on the fact that we have swept the liquidity. However, whilst 90% of that is efficient, there's that one candle just below the red horizontal right now on the 5-minute with the imbalance. But ultimately, it's still pretty efficient.
In terms of expectational order flow as well, if we do the daily, if you look at the overall weekly daily, it's still what we've had here is our bearish pullback into our overall potential long.
Yeah, exactly.
So if this is going to be the push off of this 4-hour order block to break structure, it will be here.
I agree. Yeah. Yeah. So I've set up an entry order buy limit. I used 0.5% risk since this is obviously we're reading between the lines a little bit in terms of our order flow. I've put it at the distal with a stop of 7 pips, which gives it a little bit of room to breathe under the swing low here. You guys good with that?
Yeah.
All right, let's place it and play price.
I'd rather be conservative and get at the distal and get into the trade, not from a fear of missing out on the trade, but rather than seeing another trade go to the upside. I'd rather lose the trade and know that the plan was completely executed flawlessly based on the trading plans that we have, rather than not get into the trade and sit there and think, why did I not try it?
One thing I'd like to mention as well is typically how price reacts after it properly breaks structure. Like if we look here, right, breaks structure, it retraces. I believe there might be structure to the other side, and then it retraces. So what I would imagine is that after price does sweep this structure and it breaks this liquidity, that we will get some exhaustion for our lower high before our higher high.
Swept the equal highs in 1 minute. Nice.
Higher low.
Double equal highs again.
The nice thing is we've actually been tagged into this trade. So basically on the base of this, we'll take out the equal highs here. And if this is a true mitigation, we won't actually break this swing low. This is now protected, so to speak. And we'll likely
high. So is
create another mitigation.
This imbalance here, obviously there's no decisional order block in there. So it's going to be interesting to see if we at least move back. Well, we kind of have mitigated it a bit.
So we're like,
yeah, there we go. Moving back into the EQ of the imbalance.
Half an hour into the simulation session, and we've finally taken our first trade. Hooray! This is really just, I guess, the best way of showing trading, where it's boring. You're staring at charts. You're talking about things.
It's patience.
You're not actually maybe executing on absolutely everything, and I think that's probably the biggest thing to always keep in mind when you're trading. If you're getting excited all the time, you're probably not actually trading the way you should be if you want to stay in this game for the long term.
There we go. Nice.
Now, one thing I'd like to say too is, and we touched on it a little bit, is that after we swept these lows and we mitigated this order block, if we look here, the imbalance was filled by this wick, right? Which is technically mitigating this area, which leaves this. So this could be a potential entry. Again, it might leave us like it did the first one, but I would be looking at this area for potential scaling.
The same, especially when we've had this breaker structure here. Momentum has kicked in. We've got the decisional order block sitting just below it, which is just here. Which is the last bit of imbalance. So I wouldn't probably move stop to break even just on the basis that we could get that reaction to that order block. I'd rather have that room to breathe.
What kind of stop loss do you guys want to do in this case?
What did you put in the last one?
7.
I did 7 pips.
Now, the concept is that these lows should be protected.
Correct.
Yeah,
being mitigated. So I would be safe under these areas.
Under these areas. So do like a 12 pip stop. Does that sound reasonable?
I think so.
We basically position ourselves under this swing low.
It's definitely a conservative stop, but like we said, them lows are protected.
Yeah, and if we are to continue down, even if we don't respect this order block, we could still respect this one, because if I just clear my drawings really quickly.
And just to confirm, are we leaving the original execution at the stop of 7 pips, not moving it to break even, right?
Yeah, we'll wait until we see price react into, because if we look at this price, we can see that there is a little bit of imbalance. So the reason why we wouldn't necessarily trail our stop or put our stop underneath here is we could tap into this range before we actually
Yeah, good point.
Continue.
Good point.
That's exactly why I don't want to move it. If we look at things before where we've tried to choke a trade, or where you get too impatient, or there's aggressive kind of management of a trade, you end up choking it before the trade gets started. If we get that second test of that area of imbalance and order block, which you can get on continuations, then you'd kick yourself if it comes back to second test, stop you out, break even, then continues to the upside.
Absolutely.
It happens too many times in the community. I've seen it.
Yeah, it's true.
You're so keen and eager to get that big winner that you're so scared to get a loss. And we know trading is built on being comfortable with failure, losses. It's fine. We build on those because that's where the success is earned.
Exactly. We go from loss to loss without a loss of enthusiasm, because if we do have that loss of enthusiasm, we'll hesitate on the next trade. And if we hesitate on more trades, we don't end up taking trades, which means we can never actually put ourselves in the position to become consistently profitable.
Okay. Nice, efficient price action all the way down.
So again, in terms of expectational order flow, we've closed above the swing high of this level.
Yep, correct. Looking for it.
And there's a lot of imbalance to fill potentially, so it should come back, but it should not, in theory, break below the swing low. Obviously, we don't want it to, but
if we were to take into consideration the EQ of the move of the leg up, then yeah, we're going to be stopped out of both trades.
Which is totally fine. I mean, it is what it is. We'll see what happens. Like, obviously, we're seeing the series of mitigations on the 5-minute chart. We're seeing the momentum on the 15, the 1 hour, the 4 hour. We framed it up with the order block. You know, obviously, we've built this trade from the higher time frame down to the lower time frame. We're starting to understand where the institution's putting the money, where are they moving their money to, you know, put our trades in the best place possible. And, you know, that's how we built it. So at this point, it's just, you know, confidence.
Right now,
speed it up just a little bit.
I want to see if we can really create some equals to target.
I think it's also important to keep in mind market timing, right? We're coming
heading into close of New York.
Exactly.
So heading into Asia. So there's going to be some volatility. Spread hours, we could see an increase in spread, lack of liquidity, higher volatility, low volume, of course, which could mean we get tagged in and out. But we're talking Aussie dollar, spreads, variable, Ducas, averages 1. You're probably talking 5-6 spread.
So see, we got to push away. If we do, I'll move our first position to break even. So we want to see it break some structure. So we've broken 5-minute structure. So I'm going to move our first trade to break even now. We'll leave the second one open as we push away. We'll just monitor price action as we continue to the upside. So obviously we don't want to move this one to break even yet, because we could still come back down into the order block, collect a few more orders, and continue.
Yep.
But obviously we want to start protecting our risks to the
really
downside.
Nice sweep. I missed that. Quickly pause it.
Pause it, sure.
On the 1 minute, that little equal high that we built.
Right here.
And then obviously the relative equals here. That was nice.
Trap traders in a range, spike down.
And
pushed up.
Real, obviously coming into the close of New York, building that liquidity for the move up to the upside to close. Be interesting to see what we do.
Absolutely.
Obviously after this swing here, if we got this here, which obviously is the 4 hour that we've been watching for ages. It's just nice to see how it's reacted. It's not just blown through it. It's building that break, retest, continuation, liquidity. It's obviously getting buyers induced, sellers induced.
Exactly.
I think, what is that? If we were to take the leg down, that is now sitting at least the 61.8 on the fib. So I'd actually say we're probably sitting up now towards the 70 handle on the fib, which is obviously from a short respect where retail sales, obviously the stops are going to be smashed.
Oh, totally.
So exactly what we want. So first trade is at break even. Second, no real, well.
It's at break even now, but just from a momentum standpoint.
What was you going to say, Blackwatch? I mean, I know you was about to say something.
Just based on, typically for me, I like to kind of be mindful of like what a potential take profit could be in terms of like, because I find that Asia, after breaking highs, it doesn't necessarily have to be Asia, but generally after breaking highs, that pullback could be enough to take us out. That as the day is resetting, I might potentially look for an area to get out. or at least take partials and then look for reentry the next day.
Yeah.
Just one of the ways I
guess
try to manage. But
a couple of things it depends on is one, market timing, as we know, as in the sessions that we're trading in, volatility, the liquidity, time of the week, the pair itself, bearing in mind it's Aussie. So we know there's going to be some APAC exposure in Australian dollar in particular, not necessarily US dollar itself, but if we look at the liquidity, it's probably about Aussie dollar forms about 5 to 10% of activity during APAC markets as well.
Yeah.
So I'd like to target, obviously we're nowhere near there. I'd like to obviously kind of first target be here, but
yeah,
I am mindful that we're rolling over the whole, okay, we're moving into the Asia session. All of those factors listed above that you've just said and I've just said. It depends on what how protective you want to be. What are these running at? Just so we can kind of factor in what's the actual R, because we don't want to be ignorant to what we're currently running at. Like just to try and get that TP.
So in combination of the two trades, we're up about 9.13%. So 64 pips.
Yep.
On the first trade. It's basically a 4.5 R basically on each trade, actually equally. And now that you've actually pointed out the daily order block as well, we do have this one to keep note of as well.
First target at least.
Which is actually, something probably to keep in mind first and foremost. So
if we were to close here, just saying purely, let's say we decided we didn't want to hold for Asia session. This comes down to individuals trying to manage it differently.
Yeah.
If we were to manage this right now based on Asia session, let's say, we did want to close it. Bearing in mind we're running at about kind of 4 or 5 R, that's a pretty decent trade.
Yeah, it was fantastic trade. And really we use conservative stops, stuff like that.
Yeah.
We're up 9% on 2 trades. We are up 9% on 2 trades over, a couple hours, maybe a little more than a couple hours, but
so 9% decent. It's just something to be mindful of and factor in. We do always want to try and hit 10, 20, 30, 40 R, 50% on a trade, and they're there always. However, let's be conservative as traders as well. 9% is decent. Would you prefer to, not you guys, just in general, would you rather be running at 9% than getting stops at break even? Depends on management, depends on your method. Because
100%.
If you're running at 9% and you realistically think you're going to close it because it's nearing your TP anyway, just for example, do you want to risk it for the extra 5 pips, just to get a little sweet biscuit? Or do you want to take money off the table and sleep easy? It depends on what type of trader you are. For me personally, I'm quite comfortable sitting at break even, but I'm going to be managing it aggressively. A lot of imbalance on the way up on the daily candle, 4 hours created imbalance on the way up. 1 hour is fairly efficient, but we do obviously have some imbalance back down at the levels underneath our entries. So there's a lot of things to consider. Grand scheme, bearing in mind it is a hedge into the short. We're looking at counter trend longs, which has obviously got great momentum behind it. Higher highs, higher lows being printed, decent traffic, decent liquidity being built to the downside as well. So this was just the hedge into the short. So everything needs to come into play, not to overwhelm anyone. But these are just the thoughts that I'm going to assume, because I talk to the guys every day. We talk about this every day. We know what we're doing because we speak about it. We actively monitor and manage it. So it's something that we all do. And
exactly.
It comes second nature when you know what you're doing.
Yeah, I definitely think an initial target and maybe even a good place to actually terminate the trade, now that I look at it and think about it a bit more, is probably at this daily order block, because we've positioned ourselves with this 4 hour, basically this candle that's created this bit of momentum. It's broken these equal highs,
nice,
really taken all the liquidity. Well. Exactly. So chances are we could see a nice sell-off on the daily, push back down into this area, and then run higher to get this next order block. So at least from a trade management perspective, since we have 2 positions running, we'll take one of them TP at this spot and then manage the other one aggressively. That way, if we do get the reaction, off of this, we can maybe take a hedge sell into this point of interest and then again, look for a buy.
And just to clarify, are we taking full 100% TP on the initial first execution, or are we going to be taking 90% of that position or 50% of that position? Just to again confirm it.
So what I've done so far is our second positions are higher up, is I've put the TP, and we can partial out the bottom one as well. Probably like 75, 80% of the position, and leave the rest to run in case it does basically
push into the highs.
Yeah, and ignores the daily order block. because that way we've been able to secure our profit. You know, we're happy with it. We're walking away with something, which is a lot more something than nothing. You know, we're happy. We're not walking away with a break even on a trade that maybe could have been much larger, for instance. So just see what happens. Let me just move price over. And even at this point, when I'm looking at it, you know, it's probably good to start trailing profits a little bit. You know, obviously we're just sitting at break even with this particular setup. So we have our TP set. Would you use probably a 15-minute structure, you know, just to put under this swing low, or do you think we're probably good at keeping break even?
Looking at 15-minute structure, obviously we're sitting at the EQ pretty much of that imbalance. We're in midst of the Asia session, pretty much 11:45. Do we get the pullback to London and New York highs, or New York highs at least?
That answered one of our questions. So what I'll do is
done.
I'll partial out our other position, do 80%, leave 20% running.
Yeah, fair.
Just keep that. What we can also do is we'll just manage our stop loss. I guess this looks like a pretty solid swing point from a 5-minute, which is this wick. Would you guys want to do something like that, or would you be more inclined with some more solid structure on, say, a 15-minute, or even on the hourly? We have this swing low here.
Well, technically, right, our trade idea is based off the higher time frame, right, 4-hour daily. So in theory, we should be able to place our stop loss on a little bit higher time frame structure. The only concern I have with it is that we kind of caught it mid-move.
Yeah, exactly.
Right? It's like, of course, the car alarm. Okay. It's done. Oh, God. If, where's my annotate?
Yeah.
If we had caught it down.
Yeah, we're at prime continuation on that structure break, which is where realistically, if we did get lower,
Exactly.
I'd want my stop pretty much where our entry is right now.
Yeah.
Yeah.
So
that's
honest,
my only concern is that
I'm
we
quite
are
comfortable of leaving it at break even, and that's pretty much where, because we're still running this higher time frame to tap into that order block. Yeah, you know, we don't know if it's going to happen. Like when we know it's going to happen based on typical S&D fundamentals behind it all, higher time frame structures pointing for us to fill all of that liquidity and the imbalance to the upside. Where we are, I don't know. What have we taken? 75% on the position?
80%.
80%. So we are running well risk-free, even on slippage.
Yeah. Yeah, we have about...
We've got to be mindful that we're in Asia session. Slippage is going to be quite prime,
proper.
even for deep liquidities in terms of the provider.
And if I slap this one on here really quick, just to give us, you know, a little bit more insight. We're tapping into this daily point of interest as well. So we could see, and we are seeing, you know, in the 1 minute, the 5 minute, and the 15-minute is, you know, starting to see a little bit of a sell-off. Obviously, you know, we have bigger structure points that we'd have to break to actually confirm that, unless we get one more push or one more drive into these areas.
Was your view along the same lines, Blackwatch? I just realized I kind of cut you off.
No, yeah. I guess what I'm saying is that based on order flow, right, that's to be expected. We broke up structurally upside. We've tapped into our order block for potential pullback.
Yeah,
My only concern is that we're in the middle of this area. If we had gotten our entry down here, I'd be happy leaving it because I don't expect price to make it all the way down here. But I think there is a high probability that we'll come back into this level, which is technically a breaker block, right?
Yeah. Even potentially this 4-hour block as well. So we can see all this imbalance and see it on the 1 hour, see it on the 15-minute, see it on the 5-minute, if I zoom out just a little bit. So there's a lot of reason for price to continue down. And obviously, yeah, that would be well past our entry, which would then take us out for break even. But yeah, I totally get it and agree with you. If we had entered down more at the bottom or had the opportunity, if we did get tagged into our trades down here that we were looking at, then I'd be more than happy to leave it at break even and see the price pull back, because obviously we're trading the higher time frame flow. But since we're in the middle you know,
Plus
My magic
there's
line.
liquidity here.
Yeah, my magic line may not get tapped.
what I realized is we actually don't have a stop loss on this trade because I took it off as we were talking about it, and then we just kind of
Full margin.
so
Just
we'll
let it run, man. It'll be fine.
yeah,
It'll
we'll
come
see what
back in a
happens.
couple weeks.
Yeah, there you go. It's
Just to
fine.
confirm, we're joking.
Yes, never martingale your account. It's bad.
Yeah, there we go. That liquidity under these lows have just been swept big.
Got this
Yeah.
liquidity there. It's
Yep.
filling this imbalance on the 1 minute. Swept that liquidity. And what time is it? Midnight.
Yeah, we're real into the breadths of the dark side of the Asian session.
Yeah, because if it was another session and I was looking for probably like a quicker play, we have broken structure and we have this order block right here. We could look for a sell, but since we're in the Asian session, I would probably steer away from that.
Number of things to consider as well. European and London-based traders, realistically, they're going to be managing their trades primarily. They may be asleep right now.
Yeah.
So unless you've got someone covering the APAC desk, which I know you do for us, and vice versa, would you continue to micromanage this position, or would you have just let your stop run at break even, slightly ahead of it, and just let the trade play out? Or based on the fact that there was that higher time frame order block that we've tapped into and reacted off of, again, coming back to management of the trade and coming back to what you're looking for, would you have just taken a full 100% off of that and then just waited for market to continue drifting higher to tap into that order block for us to get that short? If so, because there's a number of things to consider. We're in Asian session. Realistically, I'm going to be I'll be up, but I'm not going to be far off my sleep. So if we get tapped out, I'll be like, yeah, done.
There it is.
Yeah.
Yeah, we could see the market structure changing. It's creating lower lows, lower highs as
That's
it
a
pushes
big
down.
4-hour candle in Asia. Big.
Yeah, that's massive. So
yeah.
more than likely, we're going to continue that sentiment for quite a while. Probably tap into this block. So definitely be keen to look for an entry at that price
Yeah,
level.
though it's created a lower high on the daily, which it's failed to kind of secure that higher high on the swing at least.
Yeah, it's true. The only thing we have to go off of, I suppose, is if we go by structure, we've got.
Yeah, we
swing
needed this
high.
pullback though. We needed this pullback. If you look
Yeah,
at where
that's true.
markets come from, like two big bullish Marabuso candles, sweeping structure on the daily, and all the liquidity that was left, it needs to kind of rebalance itself.
Oh, absolutely.
So,
Prices
are
doesn't
we-
keep going up.
Are we through Asia? We're in Asia still. We're still in Asia. Okay. never mind.
Still in
in
Asia,
Asia.
early 4 a.m. Heading into the lull of it, obviously.
Speed up time as we go through Asia.
Now, one thing I need to get a little bit more data on is that the fact that we're coming off the daily, off the 4-hour, can I shift this to my swing high, or is my swing high still have to be this point? This is something that I want to look at, because if price is going to continue to the upside, in theory, right, it's not going to break structure to the downside, which would be our swing low here, right?
Yeah.
So
Yep.
there is imbalance here.
So basically what you're trying to say, we're trying to look for longs on the scale.
That's what I want to know, right?
Yeah.
If we're on the daily, we've had this kind of bearish pullback, and we're starting to form bullish structure that's breaking structure to the upside. Am I now long, like long term?
Yeah,
And again, this is something that I need to get more data on, but it'll be interesting to see how this plays out.
Yeah, totally agree. Just look at that momentum in the 4-hour. That out of the way.
This is also like right around the midpoint of this level. Well, it's well past it, actually.
Yeah, this is where, fear of missing out, it's not really coming in. Like, yeah, we weren't able to take a sell here. Wasn't really an opportunity. We didn't rush anything. We didn't force anything. We just maintained our composure. We kind of, figured that this was going to happen, but we didn't force that view and force a trade that, we would have gotten tagged in or out of.
What are we up? Bearing in mind that first trade and a half, we got tagged, probably like 0.5% on first trade?
Yeah, something like that. We were able to secure 80% at the daily order block, though, so we were able to get in. So now what we're looking at is we have the 4-hour order block, which we've identified, which we can then more or less refine to.
Just be mindful of those wicks on the 4-hour, like the wick below the AOI. The order block is obviously.
Yeah, and what we can see too is if we look at it from an hourly perspective, if I just zoom in just a little bit, we've swept the equals with this. We've created basically this mitigation here. And if we just refine our what would be a sponsored candle here, we can use this candle. This is the move that actually creates the move that breaks structure, creates the imbalance. So it gives us a little bit more of a refinement that we can look to enter on. I'll slow price down now that it's in our point of interest. So now we can look at the 5 and the 15 minute to look for potential confirmation entry. Because obviously, we wouldn't want to take a risk entry looking at this bit of momentum. Like that's just trying to catch a falling knife. We have a lot of reason to expect that price is going to continue moving to the upside, but we don't want to just try and catch it and get burned. It's better to just, wait, see what happens and go from there.
Nice reaction. Yeah.
Massive.
Ditto.
Ditto. Yeah, this is good, right? Because strong bullish push, break of structure to the upside, a fill of imbalance. Look how much imbalance is just in this one particular area.
Yeah, it's like a ton, and it's in like both areas. So that price, and that's probably why price has come down so rapidly. There's a massive gap of orders on the buy side and the sell side, so it has to be able to offer those.
Yeah. So it's like imbalance. This filled this imbalance, but it left imbalance, so then it filled it again. It's like balance inception.
Yeah. Which I think that is pure liquidity trick. So if you actually think about it, right, this imbalance, obviously the first imbalance created the motion for further downside bias, inducing sellers to get in. And then what it's done is it's kind of double positived itself, which is obviously, okay, right, we've created this imbalance here. We've then filled that imbalance with this imbalance, which has induced the longs from this break here. We've then broken to the downside with this huge move, which in turn is obviously filling this imbalance. What are we doing? We are literally inducing sell side FOMO liquidity for continuation to the downside. 4-hour tap of this order block, which we can see. And then we continue to push that wick on the 4-hour heading into London pretty much. There's a lot of liquidity in there. Like that is a big order to push the market that much. Yeah, Asia session is slightly thin, but to react off of that initially, it shows that there's intent. Don't get me wrong, bearish pressure could still kind of outweigh it, but
absolutely,
that's a big order to kind of shift the market. What is that, 20, 30 pips?
Are you in there now? Nice.
Yeah, so break even, because as I didn't really talk through the strategy you guys were discussing, but we've tapped into the area of interest. We've broken structure on the 1-minute time frame. So obviously this is more an aggressive entry, taking all of those factors in. We have this order block here, basically took out equals on a lower time frame, obviously, kind of reading between the lines here. Now, obviously there's a lot of people who are probably watching would be like, well, aren't you worried about this imbalance? Yes, it's very likely that price will fill that in. So obviously I knew that is likely, that could happen, but obviously we can see that from this 1 minute, a large move to the upside and a continuation. So what I'd be looking at is at least trading into this 5-minute order block and 15-minute order block, basically as potential target, maybe even look to do a counter trend sell back into the origin that could even tap into our 1-hour, 4-hour order block a little bit further as well. It's kind of playing the range, knowing kind of where liquidity is, knowing where the market's likely to move to, and kind of just creating trades based on that. And obviously this is a little bit more, we'll call it advanced, or a little bit more reading into price action, some voodoo, if you will. But it's something that we can definitely do if we kind of understand what we're looking at.
One thing as well that I'd like to point out is the way it broke. So again, moving back to kind of mapping for those that aren't completely confident, that is the swing high. Not exactly the greatest, as you can see, price is just shifting it a bit, but look how we broke it here. Very wicky. Shows it's potentially going to move back to the decisional order block, which is why we aren't necessarily concerned by this imbalance that was left here. Just on the basis of that break. It's a decisional order block break, basically, which is the type 3 mapping. Does that make sense?
Yeah, absolutely.
I think so. I think in terms of, again, expectational order flow, right? We didn't break this swing low before we got this reaction, which is a good sign. So I think overall, I think we can keep our bias a little bit bullish here.
Yep.
But I am interested to see
That push.
because if we look at series of mitigations, right? We got an order block, or at least a POI here that's been mitigated, and then we have another one here that's been essentially mitigated, which kind of leaves this area that you have. So, right. So a take profit is, I think, really good there, but I'm also a bit interested. Oh, you already put a sell limit in.
I did, yes.
Oh, well, all right. You're on.
I like that you led it because I did it and you didn't even know I did it and you were already talking about it. So
yeah, man. Sweet.
You can tell we talk about trading every day because we're kind of reading each other's thoughts. Let me just adjust this as you were talking about that. I'm like, I'm not actually right on the distal and I want to be. So let me just.
Now what we see here, this on the higher time, well, I guess we have the higher time frame, but I think like on a 30-minute or so, you would see that this is making price efficient, which is why you get this wick, which is why you get this fill.
Yeah.
Just so people know.
Yeah, that's set to break even. Okay, cool. I was just making sure that I have everything set properly. I'll admit I don't use Soft4FX or MT4 as much as I should. I'm spoiled on TradingView, so yeah. Let's see what sort of reaction we get if we tap in. Obviously, we have kind of two different trades set up here. Basically playing this range, more or less.
So this is actually inducing sellers because it's filled the imbalance. This could be seen as structural liquidity here. If this order block is being held and if there's manipulation around it, right?
Yeah.
Now we have equal highs even. That's even better.
Yeah, we're starting to see sensitivity here. So we're getting people to sell. More than likely, we're going to push up into this. We've noticed the 15 and 5-minute order block, which gives us more reason to kind of look for that sell. Because obviously, in most cases, retail traders, they have the right bias. They just don't quite execute it correctly. We'll just see if that actually plays out or if maybe we've missed it. But I think we're okay. These equal highs are just so perfect. Like, yeah,
those are right above or right below the OBs.
Yeah, and look at like if I just put my measure tool, like they are literally equal. Like we can't get better equal highs if we tried.
The cool thing about this too is because the people that are bullish are still putting stop losses here. So if this sell, oh, it's already taken them out. Never mind. Wait, no, not quite yet. This one,
Well, and even that series of lower lows and potentially lower high, but then we just broke in what this would have been the lower high, was just getting more people to sell. So the last point to look for sells would be at these equal highs. And then we'll get some of the breakout traders looking to buy if we do break those highs.
It's another set, another level. So right, now you got this triple top formation, right? So people are like, oh yeah, this is definitely going short. They probably got their fibs on from here to here, drawing that, putting their stop losses just above this level. This just becomes a graveyard of stop losses and liquidity.
Literally the consumption and liquidity that's being built in here. In this looks like a reaccumulation at the moment, which obviously we've got to see.
And also, one thing to note is, what does this price represent from a session perspective? This is Asia. We've created liquidity on the upside and the downside. London Open.
Asia range sweep.
Swept the liquidity, which has tapped us into our entry. And this is so important because we framed up a trade with the logic behind it. We didn't just trade the sweep, willy-nilly. And we'll see if we do get that obviously pushed down back into this range to look for a long entry.
Yeah, because I still have interest in here.
Yeah.
If price, well, I don't know. That's aggressive maybe because we don't have a breaker structure to the upside, so not on the 5-minute anyway.
I do think that is a good point of interest, but yeah, I agree with what you're saying. It hasn't necessarily broken structure, so it's an area that'll likely get mitigated, but we can probably use lower time frame price action once it gets into this. So I'll cut the trade short, or short trade. I'll close out of it, cut the short trade short in that area.
Because that's the thing we have to remember, right? It's like you got to know where you are in the higher time frame, mid time frame, lower time frame. You got to have an understanding of where you are in terms of structure and know if you're counter trend or not. Like we know very well that we're counter trend, more than likely. There's a good chance that we're counter trend. So we're not going to let this thing ride forever.
No.
Correct. You have got to remember that we are still. It's creating that liquidity on the daily and the 4 hour.
Yeah, because you
It's
see this on
breaking
the
lows,
daily,
it's breaking
gonna
highs
get
on the 4 hour.
sellers.
Yeah.
Like just one candle doesn't mean we're going to be selling, but a lot of people think that, and that's that's what's said. You start seeing daily candles selling off, especially this retrace. And then now we have a lower high within this daily range, so to speak. That's getting more people to want to sell,
Mm-hmm.
and then we see this kind of framework here. We're seeing lower lows, lower highs. Already seen the first attempt to take that liquidity, but it's still pushing down. Factor that in with the daily, the large push we've seen. It just gets more people to want to sell.
Early hours, London.
Speed that up a little bit more.
So let's see, where are we in terms of this POI?
Still a little bit
We're
more to
in-
travel
we are
down.
diddly in the middly. Literally, we just need to sit on our hands at present, wait for this liquidity to build, wait for market structure to kind of flow into London Open, which we're just heading into it now. So we should see some volume spikes.
Yeah, so the question is, do we want to take profit? Okay, so it swept lows, right?
Yeah.
Yep.
So this is big. Swept lows, it's just, I can't draw a straight line here, but it might have just tapped into this POI. So around this area is potentially where I might say, okay, maybe this is where we cut it, or at least we trail it.
If it
One thing
breaks
you
that
could do-
swing higher, that would be interesting. On the 1 minute spot 70.90. If it starts
Yeah,
breaking and showing bullish intent, like you said, start trailing your stop and kind of focusing on what that's going to do and how it breaks.
Because you want to give it room, because maybe we could be wrong. It might just blow through. It might fill this imbalance down here. Tap this POI, But
What was the Asia session overall? Was it a kind of a continuation for pushing down? It's not exactly the cleanest of ranges.
Yeah, not necessarily. So we've tapped into, that 5 minute POI. It's not really a clean POI, obviously, but it's filled in all of the imbalance, and we're basically revisiting our block, that we'd be looking to trade. Let's slow down price.
This whole section here is not a nice range in terms of the Asia session.
No, definitely
at
not.
all. Like, look where we've come from, a little bit higher up to the left. Like, that looks like downside continuation at the moment. It doesn't look like I'd want to go long just yet until we see maybe some conviction to the upside.
Yeah, exactly.
well, that's a good push.
Yeah,
Swept a little bit of this liquidity here.
Yeah, you can see how it broke though. Type 3 mapping, structure break on the wick, and a little bit of the body.
Yeah, and I think what I'll do too
Direct pullback.
is obviously we're not looking to save the world with this trade. If it breaks past this large range, I think we're probably going to start seeing higher highs.
I think it's going to, just based on if we look. Let me just grab my.
So one thing I like to do when this kind of stuff happens, like in terms of, so see where that box is right there?
Yep.
Because we broke this 1 minute structure to the upside, I would also move my stop loss here, but I would also just set a take profit here. Or here, obviously, but I would essentially sandwich the trade just based on the fact that we might be getting, because what time is this? This is London Kill Zone or London Open? Where are we?
This is 809, so 753, 809 range.
So I mean, it's something you can do, I guess, but it's something that I've been playing with lately is that if I am expecting bullish pressure and I start getting smaller substructure breaks to the upside where I might be looking for longs, I'll sandwich the trade. I'll put a stop loss. And if price is failing to break this level, I'll take profit at a POI within this after the break.
Yeah, that makes sense.
Because that way, if this does break to the upside, we could have taken profit here on the stop loss, but it gives us that extra chance just to get this little extra out of the market.
Yeah, no, that makes sense.
That
And
equals creating.
exactly what we've done here. Close out on the trade. So now we're flats, and I'd be looking for the longs, especially, if we're looking at the mitigations here on the 1 minute, You can see that we took profit at that POI, we've broken structure here, created imbalance. So this creates this. So now we can start to look for potential other point of interest to look for an actual trade. Now that we're starting to see, a series of mitigations, whether we enter on the next one or the one after that remains to be seen, but that's kind of the logic that I would kind of approach with, especially once we break this high.
Sound logic.
So we've
Sweet.
swept it, so it's not the most convincing break, but
No.
we can definitely see, is there anything on the 1 minute that would give us, maybe potentially an entry?
Need to sweep them, don't we?
Yeah, we got equal lows. Let's just see. Broke it with a wick, so the origin, you can see, tapped into that. So we have this area right here. Just draw that on.
What, that decisional there?
Yeah, this decision. Let me just draw a rectangle on it. If we take that maybe at the origin, or not the origin, sorry, the equilibrium or distal. Distal's probably fine because it's the 1 minute. We don't need, absolute precision in terms of that. We're already trading on the 1 minute time frame. Let's just frame up the trade here. 12.5 pips, or do you think? I mean, we're not really trying to be a hero here. Put it underneath the swing low. At least that way, if it mitigates this, we've given the trade room to breathe. So we've identified 2 potential point of interest, but we've broken with a wick. So we know that likelihood is decisional versus origin. So we've kind of given the trade room to breathe.
Yeah, we also have that series of mitigations, right?
Exactly. So it gives us a little bit more incentive or inclination that this low will be protected. And since we've mitigated this low will be protected. We position ourselves just under that low with a stop loss. So, based on that logic, we should be good because we're kind of backing ourselves with the money that's, entering the market. We got tapped into the trade. We'll see what happens.
Relative equals as well, still at the upside that need to be swept.
So we have, good kind of initial target to shoot for here on the 1 minute.
This is building liquidity right now.
Absolutely.
See these sweeps, swept those equal lows that were created on the 1 minute, which is just following our entry.
This is like basically an accumulation schematic if you want to break it down. There's your test of if this is the true spring. That could be our spring. It's like obviously you don't know what the spring is until it happens, but
Objective, isn't it, all the time?
Yeah, exactly. But you can see prices ranging, so we are definitely building liquidity here before we,
Ooh, look at them. Come on, we need to take them out.
Get a pop to the upside. If we are going to continue the upside.
There we go. Nice.
There it is. Boom.
Look at that. Taking out them.
Nice. 5 minute liquidity swept too.
Yeah,
Decent
broken structure on the
breaker block,
here.
which we tapped back into.
15 minute.
What have we got?
And that's the best part about not kicking yourself that you missed this first order block here on the 1 minute if you're trading the 1 minute, because you get that mitigation and then that's where the real momentum comes in. We can see that we've been able to actually build liquidity here, basically range price.
No, wait, actually there's a breaker block too right here.
Yeah, which is what we're basically.
Yeah, that's what.
Yeah, sorry.
Which was this bit, wasn't it?
Yeah, exactly.
Yeah, exactly. Lower high just printed. This needs to be protected. Oops, high low, nice. Okay, perfect. That's exactly what you want to see. Congestion zone where all that traffic was, high low, lower high, then another high low printed, and then a push to the upside, creating that breaker structure. Equal highs just being carved out there.
Yep, looks like
bearing in mind what the 4 hours doing, pushing back up. Daily's obviously still in the middle. 15 minutes got that target up here to kind of break. Just zooming out, not necessarily taking into consideration full 1 minute. She would higher highs. Fair amount. This here could be tapped. Obviously, we've got this imbalance. 50% of it has been mitigated.
Yeah,
we got that imbalance.
Looks like
anyway.
equal lows too. So this could be a good area to look for a scale in. So I don't want to buy stop. I want a buy limit. Seven pips. Carry that on. What I'll also do is show the stop loss underneath this swing low, 15-minute swing low. And I'll also click break, so that'll help us carry things up. See this price come down. We got these really nice equal lows, so shows a good sign that, you know, we'll probably revisit that. But if momentum just takes over, who knows? You can definitely see the momentum's still in the market.
Yeah.
And like if we're looking at
Waiting a little
the
bit,
4
just need
hour
to-
and the daily structure, it's still bullish. Like, you know, obviously the hourly structure was bearish when we seen
Just
the large
something to-
drop, but
we've mitigated this block on the 15-minute a little bit, but there's still that block there, even though the break of structure come from here, not this level here.
yeah,
Not this level here, just to confirm.
exactly.
So yeah, there's just liquidity sitting there, that's all.
And we'll see how we break it. You know, if we break through it really cleanly, then we know that it was fully mitigated. Obviously, if we start to sell off, then yeah. But we're starting to just see momentum.
Broken structure again on the 5.
Yeah,
Whoa.
Seeing
nice imbalance.
Nice. So, and this is why you don't just take any order block, just to confirm.
Yeah,
So
exactly.
that right there, yes, it is an order block. You know, yes, it's been partially mitigated. Yes, we had all of this imbalance to the downside that was mitigated on the way back up, but it is still an order block. But that is why you primarily focus on higher time frame structure, focus on what's going on in the bigger time frame, and not just take every Tom, Dick, and Harry order block that you get.
Well said. I like that.
Thank you.
Bob's your uncle.
And Bob's my name.
And also, we'd be fighting the momentum if we were looking to sell at this point.
Yep.
At least here, we've seen price slow down in range, so taking that sell made a little bit more sense. But yeah, I was actually just looking at that as a potential, because we've broken some really key 15-minute structure. We broke it with a wick, so from a decisional standpoint, that makes sense.
In terms of management, obviously mindful of the daily order block that we're kind of approaching back into. That bullish order, the kind of the momentum that's kicked in, which we were keen on seeing follow through. Are we now, and this is obviously just so that everyone can see, are we now going to play this order block as a take profit, or are we actually pushing back up to the higher time frame daily order block, which is one where we pretty much have been positioning ourselves from the very start?
Yeah, I think it's one of those, we've reacted off of that daily order block, so it's definitely an area to keep in mind, to watch and, you know, see if price reacts. But we had such a strong reaction, you know, when we tapped into it initially. Chances are, if we look at it from an order flow perspective, we've probably taken the majority of the orders from that. So probably won't see a huge reaction off of it. Obviously, it's something to be mindful of and, you know, to trade accordingly with. And, you know, we start to see a lot of sensitivity, then, you know, manage the trade aggressively, cut it short. But I think, you know, just looking at price action, we have all the ingredients we need to continue pushing price up higher now. So we can probably target more of that upper daily order block versus this one that's already now been tapped into. Because in a lot of cases, it's really just playing the order flow. And we can see, you know, they took the sells, tapped into this order block, and they're now buying to push it further. And it's that series of mitigations on the lower timeframes and the higher timeframes to really understand the order flow that's really in play and present on the charts.
Completely agree there. And
exactly,
expectationally, right, we failed to break the low on this pullback, the swing low. So in theory, we should be expecting a higher high.
Yep,
exactly. Yeah. So we'll see if we tap into that 5-minute order block. You know, we'll just kind of,
that's the level we're going to want to see on the daily then.
Exactly.
Broken.
We'll just blast through price a little bit more, and probably should think about cutting this at some point very shortly. Been going for a bit. Obviously, it's been really insightful. I think, we're up almost
Yeah.
40% on this, over a couple days of trading. We
It's only been
started
4 days.
Yeah, we started on November the 1st. We're on November the 4th. We're up 40%.
So
We've been
one
super
week.
conservative. Yeah,
Correct.
exactly. 1 week of price
Just
action,
created
not
equals
even.
on the 1 minute. So
So we have more reason for price to break down, tap into this level.
yeah, right here.
Let's see what happens. I'll even make it go a little bit faster.
Oh, swept it.
Beautiful
Yeah.
sweep.
Fill the imbalance, make it efficient. Right there. Come on.
Let's see. Did we tap it? Did we miss it? I think we
It's
may have
efficient.
just missed it.
Depends. Can we
Oh,
come back?
there we go.
There we go.
Oh,
Whoa.
okay.
That
Oh,
was
it
getting a
filled
bit
it.
hairy. High lows, lower
Right, so-
highs.
It's filling imbalance.
Yep.
I think Blackwatch fell off his chair there. Sounded a little far away.
I got really close to the screen. I was staring at the pixels.
It'd be quite interesting to take a loss though, just because it's been
Yeah.
textbook all the way through.
Oh, it
this.
really has been. And I just want to asterisk all of this this isn't like typical trading. We do take losses. We've just, I guess when we put the three of our heads together, we're able to do some magical things. But
We see everything. Yeah, this is great.
Yeah. So yeah.
Look at this, man. Imbalance, right? I think
Do we need
this
to put
is
a
the kind of
disclaimer?
yeah.
disclaimer.
Yeah, go on about the imbalance.
It this is the kind of fuel, the kind of momentum that you want to see in a higher low for that
Yeah.
higher high. So I think if it's going to push, this might be it. We'll see. Hopefully.
Let's run this and then we'll start to trail the stop or just close the trade for the sake of this video.
Yeah, I'll just kind of explode time a little bit. So obviously
Equal highs created on the 15-minute and the 5-minute.
If we see the 1 minute, we also have an order
Even
block
1
that we've
hour.
just tapped into. So we could
Yeah.
see another mitigation, which would mean that this would be a secured low as well, which could give us more indication that we're just going to see further upside, especially since
Yeah.
we have these equal highs on the 5 minute, the 15 minute, the hourly.
So yeah, exactly.
Swept it a little bit, but we've still been able to maintain it more or less so far. But let's see if we get an actual break of structure. And there it is.
If it breaks, then this would be a good POI again. Whoa, yeah, that's a break.
That is a break.
What time is it?
It is 4:30 coming into UK close, London close.
Okay, so we
pretty
should,
much auction period.
in theory, break of structure, London, New York lull periods.
probably
we should see a
range,
bit
yeah.
of a range.
But I do think that this point of interest is pretty important. We took out the liquidity here.
Yeah, break.
So we might just
Leave.
range for a while and then revisit it as another potential entry almost.
Yeah, the only thing I'd be concerned about is these
Yeah,
equals and
kinda
the imbalance
equals.
below.
Yeah.
Here.
Exactly.
That's the one thing I was looking at on the 15-minute.
Yeah, you can see it a little bit clearer on the 15 minute. But even on the 15 minute, that area is,
Oh yeah.
It's efficient. It's just obviously
Yeah.
that bit there that's got the mitigation.
yeah, because we have, what is this? 71,631, 71,530. So yeah, you can definitely see we're in spread hours as we look on the 1 minute chart. It's just not
Yeah.
nice.
Look at that. As we head into APAC, probably want to start winding it down, I guess. Just
Yeah, pretty much.
otherwise, we'll continue doing this for 2 weeks, and I don't mind doing it, not at all. But I don't even know how long this has been going on for.
Yeah, probably. Don't try this at home, kids. Do 10 pips. We're not trying to be a hero. Maybe we are with the risk.
Are we
Probably.
taking another trade?
Yeah, I'll do one more. Just see if we range. Tap it in. We're either going to lose most of our profit or become heroes. So
I think it's gonna depend on where Asia
The equal
develops.
lows. This is going to sweep. There we go.
There
let's just see it. Whoop, 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 whoop.
Ooh, that's
Oh,
deep.
yeah.
That was textbook.
This
Come on, break
is-
these highs. We need it to break these highs here.
Yeah. Well, maybe just going to take profit and just
Take profit here and
Just
take profit. Visual mode. Put it right there. Now I'll just put it on super speed and we'll call it a day. Obviously, the last trade I put 10% risk. I'm just messing around, but the theory was still there in terms of that. I don't condone 10% risk. So
Full
please.
margin. No. Hold on, was that full margin in Asia? Yes, it was.
Yeah, clean.
Look at that trend line liquidity.
It's me trading 3 years ago. Now it was like 4 years ago. Let's keep seeing how do we react to this daily order block.
118 lots. Just
Yeah, casual. Let's speed up a little bit more. See, obviously now we're just blasting
Equals
through because we're going to end
created.
it, but
Nice. Well, hopefully everyone's taken a lot of value from our threesome.
oh, don't call it that.
yeah, we're going to have to edit that out, I think.
No, don't do it.
So let's just say, we've done 5 trading days. Let's not look at this percentage. It's not legal.
Freeway trading session.
18 and over, man.
Yeah, 18 plus at least. ID is a must.
Yeah,
Just
sorry
do
about that.
There you go. Censorship.
And as a disclaimer, we traded as per our trading plan, putting 3 mines together. So obviously 3 mines are better than 1. The last trade was a bit of a jam, if I'm honest.
Yeah, it was definitely the technicals were there, but my risk was a little bit different, which is obviously why, we're sitting at 225% for 5 days of trading.
So what was the last trade? If we were to just kind of remove that and factor in the trades that we did take conforming to 1%.
Yay, thank you.
Thanks for
I
joining.
mean, to put it in perspective, like it was like 21K on the account. Sorry, that's my P&L. Yeah.
118 lot trade.
I was like, oh my God, this is just stupid. That was $156,000 trade. So
put that little comma in there.
It's all relative as well. This was what filmed on 100K. Compounded.
1% risk per trade, except for I think it was the first trade we took. We did 0.5% risk because it was kind of
I think it was the second, wasn't it? 1% on the first, 0.5% on the second. I think that was our TP on one of them on break even.
Oh, that's an eggplant equity curve right there. So
yeah.
But yeah, so I hope that was helpful, insightful. Obviously, it was a little slow to start, but it's trading. We can't predict what's going to happen. We can only plan. And
I think it actually couldn't have started better. I'm hoping that it helps people induce their own patience and realize that we are trading exactly how we would trade, other than that last trade, completely complicit to our trading plan. That's the way it goes. You may not necessarily get a trade on every single day of the week. We just have to wait until the market develops, builds that liquidity, as Sketchy says, builds the story, induces liquidity into the position that we're looking to take, and then be completely proactive, but react to market conditions as they form.
Yeah, completely. It just shows like the level of precision we can get in the markets here. Like broke out exactly how we were trading, why we were taking buys here, why we looked for sells, did get sells, why we took a buy here, a sell here, and ultimately took these larger buys, lower time frame entries, but higher time frame momentum and trade ideas. Now you don't have to go down to the 1 minute to get the entries. Obviously we did, and we do, but it's not necessary when we know kind of where price is likely to go and we understand order flow.
Mm-hmm. Yeah, no, fantastic. No, definitely. I hope massively insightful for all of the community.
Yeah, absolutely. And, thanks you guys for jumping on. Hopefully this doesn't take too long to upload onto YouTube and the community can dig in and enjoy it. And feel free to give us some feedback and, comments on Brian's excellent drawing skills.
I'm a chart artist. Okay.
Yeah.
Chartist, actually.
Picasso.
No, have a lovely evening, everyone, and speak to you very soon.
Yes, take
Take care, guys.
Cheers.
Cheers.